stay long. I see you, man.
For sure. Man, I'm in on a bunch of gaming tokens. They're freaking going crazy, man.
Oh yeah, dude. The things are going nuts, man. Or you have ninja assassins and stuff like that.
No, I have Ultura.
There we go. I don't know what this is. How weird. I think the mothership. I think the mothership just landed on my roof.
They're coming after you.
They've been trying to get at me for a long time.
Area 99.7 percentile.
and they see this and they're like, "What the fuck? Let's get out of here! This guy's nuts." Well. The mountains are alive with the sound of ski lifts.
Oh yeah.
I got a shitload of snow. Sun's finally coming out. Had about 50 hours of straight rain down here in the valley. Drove to Reno in the morning, got a peek at the mountains. Yeah, I got a lot of snow up high. Major footage above 8,000 feet. Good stuff. Kind of like cryptocurrency. It's good stuff too. Let's see here. Alpha traders. Let's take a little peek at Bitcoin right now. We're going to do some analysis today. Got a new weekly. Beautiful thing, right? Going into the end of last week, had a little pullback, right? You can see it right here. Boom, 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 boom. It was in the volatility charts, obviously. I mean, it did. And I recently, I talked to an old friend, talked to him about the divergence between returns and price action. It's powerful and it builds. It builds. You can see from this, when we came out of this 41K low, this first big returns candle down here, all lower highs. You can see each stab, a little div though, right? Played out. It just builds and builds and builds and builds and flush. This is what happens. And those of us that do trade the div between returns and price action, we know this, right? Because it's literally telling you, it's unlike any other type of divergence. It's the only type of divergence I even look at or put any weight to. It just makes sense. A lot of people don't even know what the returns are. It confuses the hell out of them. Hell, it confused the hell out of me when I first started getting into returns. I'm like, what the hell, returns? What is returns? It's a return on your investment. And so when you start to see divergence between price action heading up, all these return candles, lower highs, it's telling you, hey, over this long-term time series here, the return on your investment is diminishing. Take your profit, or like a lot of retail traders is what they do. They get this pump. Oh, we're consolidating. Okay, here we go again. I'm going to add on to my position. Get another leg up. Go sideways. Oh, I'm going to add on again. Oh, I'm going to add up on again. Now they're 70, 80. Who knows? Some of these people are 100x leverage traders, which is ridiculous. If you're doing that, you better go get it. Go get checked. Then this pullback right here, right? About 10%. I mean, it pulled back about 7K, I think, was the total of it. They get liquidated because they don't take their profits. Instead of being like a volatility trader, right, where you pop this down onto the 4-hour. Now look at this fun stuff, right? This is coming from about the same area, right? You have this little pop. Boom. You're taking your profit there. You're taking your profit. All these 4-hour moves to the top side, downside, top side, downside. These are all very tradable when you trade volatility, probability, and statistics. Let me go back to the daily now. I wanted to point some stuff out. So what we're looking at here is the projection bosses. Alpha trading projection bosses. And what are these alpha trading projection bosses telling you? I've got two set up here. I've got our projection boss 2 that is projecting a Laplace distribution range. Everybody remembers the bell curve and normal distribution, right? From school days. This is Laplace distribution. It's a lot different. You're going to have a lot, like in normal distribution, you've got the first standard deviation range, second standard deviation range, third standard deviation range. In Laplace distribution, you don't have standard deviations. You just have the probability percentage ranges, right? And the 68.3% Laplace distribution range is a lot tighter than the first standard deviation of normal distribution, although they are both 68.3%. It's just the difference in the distribution models. Now, what is really close is the 95.4% Laplace distribution range and the second standard deviation in normal distribution. And then it changes again when you get the 99.7% Laplace distribution range and the third standard deviation normal distribution range. It's a lot different. The Laplace distribution 99.7 is going to be a lot wider of a range. This is why we use this. Why? Because this is a distribution model you want to use with real volatile assets. What is a very volatile asset? Cryptocurrency, period. The whole asset class. Very, very volatile. And everybody that traded this way started to realize, hey, because if you look at normal distribution, you'll see, and they're talking about traditional stocks, or metals or oil or things of this nature. And very rarely do they get a move outside of the third standard deviation. Very rarely do they have a fat tail event, right, which is above a second standard deviation. Cryptocurrency, on the other hand, all the time. So they're like, well, you need to figure out a better distribution model to handle this asset class. Laplace distribution, 100% works very well. So we've got our PB2 projecting from the 28K low. Then I've got our PB1 projecting from, oh, that's a little far back. Let me back these up one more, or bring them forward one more. 27. Boop. Let's see here. Let's get this back in. There we go. There we go. That's where I wanted to start. Now, I talked about this all week last week. I started talking about it right here when Bitcoin bounced off of the further back projection from the 28K low. Break. You can see, right? Look at these wicks. Look at these wicks right here. This is when this started squeezing. This is why I'm going to continue to keep these distributions like this, especially now. Look how this started squeezing and bouncing in between the top side of the 95.4 of this Laplace distribution range from the 41K low and the one from the 28K low. Started squeezing price action right here. We got these two wicks right here bouncing off of this distribution, the 95.4%. Finally, boom, we get a little doji candle right here, and then bam, we get up above them both. Right about here, I started talking about pay attention. These two 95.4% distributions, they are going to come together. And that is going to be a powerful place for a bounce. We got a good one today, and look, these things they're really tight. They're really tight on each other. You can see how when we were getting this move down, we got these wicks, but they kept the candle closes kept closing above the 28K low projection. And now we used it as a launch pad right here to get this. At the peak, it was about a $2,500 move, I think. This isn't done either, by the way. We'll get into the charts here in a little bit. So, how did I know as well that there was going to be a bounce there? Well, number one, I put a lot of weight on these distributions, right? But then all you got to do is look at the div. Look at the div between price action and returns on the daily, right? We got lower lows on price action, higher lows on the returns. Bam, we get a pop. And this is how this works. This is how the divergence between price action and returns will give you a heads up onto what is happening in these markets. Especially cryptocurrency. It's so volatile. And when you have volatility like that, there's going to be such an imbalance in buy and sell pressure That's what creates the divergence to begin with. That's what creates your return to diminish in the first place. And so by recognizing these things, you're going to have a leg up literally on 99.99999% of retail traders, right? Because, you know, and that's the thing, a lot of retail traders, they're led into the traditional form of technical analysis, which, you know, that's fine. Everybody's going to trade their way. I don't have anything bad to say about any of that. But at the same time, being a volatility trader, it's like, hey, we'll try to show you some things. If you want to come in and learn how to trade volatility, probability, and statistics, we would be more than happy to show you the way. But if not, we always need people on the other side of our trades, just like the high-frequency trading firm algorithms that are programming their bots with volatility, probability, and statistics. So a lot of us figured out, hey, I want to trade with the smart money, right? Those are the guys that are getting rich. You know, not that I look at it that way. I don't look at trading as getting rich. And that's where I see a lot of problems going on in cryptocurrency today, because a lot of people, this is their first experience into trading to begin with. A lot of millennials, a lot of young people are getting into trading through cryptocurrency. So they think this is normal, right? This volatility. It's great, but this is an incredible asset class. There's nothing that's ever been like it. I mean, some of the volatility moves that you have are so powerful, it still blows my mind when this stuff happens. So good stuff. Like right now, I mean, look at this 15-minute, for crying out loud. Why? Let me show you. Let's go over here on the 15-minute chart real quick. What do you see? I'll show you. For all you alpha traders out there. Divergence between price action and returns. Right, the white line is the return oscillator part of our Wolf's Bane indicator here. Very powerful indicator. It's got a lot of good things built into it. Variance, z-score of log returns, and of course the returns oscillator. The histogram here is the R squared between returns and price action. Right? So when you get a change in direction or even divergence between the returns and price action, you can look to the histogram to see whether the correlation between the two, is it increasing or is it decreasing, right? And I'm telling you right now, this is some stuff a lot of people don't even know about. They don't even know you can correlate these statistics, right? You can correlate the volatility. You can correlate all this to price action, and it's going to really give you a heads up on what you can trust at the time. That's what's incredible about it. Just like did we just build an entropy indicator by itself? That's the bottom side here. No, we build in an R squared, our entropy price percentile above it. And that is going to tell you that when entropy drops in the trend, which is blue, it's going to tell you if the R squared is increasing or decreasing, right? The correlation between entropy and price action. And right here, you can see it's increasing, drops into trend. Look at the 15-minute move. Boom, bang, bam. Now, was this the move yesterday? Let me see here real quick. Yes, it was. Here, let me show you something else. It's real cute. And this is why we use PB2. Let's blow this up a little bit. Dun, dun, dun. Was that the time I was talking? What am I, UTC 7? What time did I talk with him last night? Was it this move? Yep, had to be. Okay, let me back this up real quick. Show you how powerful this is on low time frames. Why we use Laplace distribution. Did I start that down here? Let's see real quick. What is that? 85 bars. Let's put the PB2 on 85. And as soon as I'm done with this, we're going to really get into we're going to really see what Bitcoin's about to do here. Okay, now, is it all starting to click? It's all starting to click. Scale this down a little bit. This is a very volatile move on any asset on a 15-minute chart, right? Just a major pop. I don't even have to look at most of these, right? Especially this one. But this was an example I used when I was talking to an old friend to show him the power of this stuff. how, look at this first candle. We open up Bitcoin. Sorry, I like to consider myself part of it. This candle right here opens up, right? Immediately goes to the downside. Where does it wick to the dollar? To the bottom side, 95.4% Laplace distribution range. Then immediately, this is all in one 15-minute candle, roars up and rejects off the top side, 95.4 Laplace distribution range. Pulls back. Next candle, we get a test immediately down to the mean, right? Down to the mean of this projection. Bounces up again. Pulls back, creates a doji. Okay, so you get this first candle, test the 95.4 Laplace distribution range on this 15-minute. Then we get a doji. What is that telling me immediately? Considering that doji closed above the 68.3. Put your space boots on. We're getting ready for a ride, right? Look at where this first candle closes. Right at the 95.4. Open it up. Shoots up two 15-minute candles, wicks right to the 99.7% Laplace distribution range. That's where it pulled back from. Okay? And then, so if you were scalping this, boom, you're out. And then what do? You're waiting for the next move, right? If you're scalping. So let's see here. 1, 2, 3, 4, 5, 6, 10. Let's move this up 10 real quick. Dun, dun, dun. Let's see if that's the right spot I want. Yeah, there. It didn't even get outside the 95.4, right? But held its ground right here on the distribution. This was actually good right here, right? So we're staying inside the 95.4. But if we even move this further up, 15 candles. I have a dog back here scratching itself. Let's go to 60. Yep, got above the 95.4, didn't quite get to the 99.7, but you can see this thing dropped back down, bam, 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 rejecting. So on this 15-minute from right here, it got back down to right around the top of the 68.3. We're pumping off that again. Hey, man, lay down, bud. Big wolf. Got 135, 40 pounds of dog meat going crazy over here. So yeah, I just wanted to show the power of these indicators, right? Of these projections. Hey man, go lay down now. All right, let's see here. Like right now, 15 minutes. Let's reset this price action. Boop. So right here, look what was happening, right? So we get this bull div, right? On the 15-minute, we get this bull div. At the same time it starts playing out, we start to get an outlier on the variance. The inside turned pink. Right? And it was positively correlated. But look, it immediately turned negatively correlated here, and you can see what happened, right? The candle pulled back, and now we opened up here. So let's see. Is this going to flip positively correlated again on this candle and get another move up, or is it going to stay negative correlated? Is the variance going to flip over, start coming back down negatively correlated, and is that what's going to walk price up? That's, yet to be seen. At the same time, when we get this pop, look at our alpha volatility z-score. This is the z-score of historical volatility. It works in the same way as any of our volatility indicators. When there is expansion positively correlated, price action goes up. When there is expansion, here's expansion positively correlated, price goes up. Here's expansion right here, negatively correlated, price comes down. This is how this works. This is how you correlate volatility to price action, right? It's a no-brainer for us alpha traders because this is what we've been working on for a long time, and people that come over here, right? It's just like our AVRs, right? They all expanded right then, flipping positively correlated. Price goes up. Right now, on this new 15-minute candle that we just got, what time is it? Yeah, 3 minutes ago. Now we're getting a red column up here on the EPP, on the entropy price percentile, the R squared. But at the same time, now look at the entropy, right? It's randomness. Usually when you get into a state of randomness like this, you're going to get another move. It could be a strong move down, could be a strong move up. It's something usually is going to happen because it's out of trend. Now it's just random. This thing's going to fly wherever the hell it wants to. There's no trend to tell you. But right now, considering that these AVRs are expanding positively correlated, it could be another move to the upside. Could be another move to the upside. Now let's take a peek here. Nope, there was no div on the deviation log pro. Boom, 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 boom. Okay, now I saw Yasha posting earlier talking about our VRE. What's the VRE? It's our volatility range estimator. This indicator is going to show you price action. Get this straight. Price action volatility ranges, the average price coming into a new day, a new week, or a new month of all the previous data set of that length of time. Okay, a lot of people in traditional TA, they want to call those pivots. This is a pivot in price, right? When we're talking about, this is what a lot of people don't understand, because volatility is not the easiest thing to understand to begin with. That these averages of prices and the support and resistance levels of those, these are volatility price action ranges. And as soon as you get that straight, people would be putting a lot of more weight on this stuff if they really understood volatility, right? But a lot of people over there are like, oh, they're pivots. Yeah, don't pay attention to that. It's just all crap. You know, you need to watch these other indicators and blah, blah, blah. They're big on volume. That's like, you might as well just stare at the order books. Here's what people don't understand. Volatility creates everything. Volatility creates the imbalance in buy and sell pressure, which in turn creates the divergence that moves the market up and down, up and down. And the entropy is going to tell you if it's random or if it's trend. It's pretty simple once you start to figure it out. So look, we open up the new day, and also we've added Laplace distribution ranges and standard deviation or normal distribution ranges. 4 hour, you can see how they switch up every 4 hour, right? All the skinny lines, the white is Laplace distribution on the 4 hour, the blue is normal distribution. The white cross lines are the daily Laplace distribution ranges, and the blue are the normal distribution ranges. The 1 SD to the downside's down here at about 59.6 or something. So we open up the day yesterday, right? Look at the wick to the dollar, right to the center of the new daily volatility range, bounced from there. First it got up, got stifled by this first 4 hour 68.3% Laplace distribution range, pulled back, created a doji, even came back down, tested the 68.3 Laplace distribution range on the daily to the dollar, then launched from there on this 4 hour candle. So the second white line up here, that's the 95.4% Laplace distribution range on that 4 hour candle. So think about it. There's only going to be 4.6% chance during this 4 hour candle that price action exceeds that level. Did it? No, it didn't. The probabilities were to stay inside here. Okay. And not only was it the 95.4 on the 4 hour, look at this wick, right to the dollar to the 68.3% Laplace distribution range on the daily. Pull back from there, test it again, kind of go sideways into this new 4 hour candle, right? We made a run. This is the new weekly volatility range. This was the bottom. So see where this bounced from? Right at the bottom of the weekly volatility range. We blow right through the center, get up a little bit above it, open up a new 4 hour candle. We're bouncing off of this red line. What's this red line? Here's the daily volatility range, okay? This solid red line here is the first resistance level to this volatility range. This red line is the second resistance level. We got up above that, and so that resistance turned into support. And at the same time, it's right, these candles were bouncing in between that in the 4-hour 68.3 Laplace distribution range. It finally breaks that resistance turn support level and bounces right off the center of the weekly volatility range. Then finds support on this R2, then goes up from there. Now, where did this price action get stifled earlier? Ho-hum. You know, sometimes I talk about this all the time because it needs to be talked about, how powerful all these levels are. When people don't understand where all this price is going, first understand 90% of all this trading going on is being done by the HFT firms, by their freaking algorithms that are trading lightning fast, thousands of orders, just firing, right? Think of it, I've said this before. When you're down here on the 15-minute chart, I find my entries on the 5-minute, you're in a shark tank, and there's massive, big mechanical great white sharks swimming around, gobbling up all the minnows. Then volatility traders like myself and others in this Discord, we jump into the pool. We're flesh and blood great white sharks. They see us and they're like, ah, ha, 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 somebody figured it out. We're swimming around with them, eating all the minnows. Because people don't understand distribution levels and price action volatility ranges. It's not the easiest thing to figure out at first, but when you do finally figure it out, you'll never turn away. You will be amazed on how easily it is to trade this way. So we reject to the dollar. This is also the R3 of the daily. Very rarely on the daily are you going to get up above this R3. There is an R4 right up here, right? But very rarely are you going to get above here. And so that's the R3 and the normal distribution for standard deviation range on the daily candle. We rejected from there. Look where we just bounced from. The center of the weekly volatility range. Where did it reject from to pretty much the dollar? The top of the weekly volatility range. All these levels are very important. Just wanted to get that clear for everybody who's watching this on YouTube. Might not understand it. Let the chart speak for itself. That's all I can say. That's all I can say. So now, let's get back over here. Why do I want to get back over here? We're going to the weekly chart, ladies and gentlemen. We are going to get the new weekly Laplace and normal distribution ranges. Let's turn off all these beautiful projection bosses. So we're left with nothing but this beautiful, beautiful, beautiful little, it looks like a starry night, right? This is the distribution level universe right here, okay? So, what did we do today? And you saw it on the chart, right? See this red dot right here? That's the 68.3% daily, or wait a minute, that's on the weekly. The daily, we hit it pretty much to the dollar, got a little bit below. But look where the weekly was too. We almost got to the weekly 68.3 Laplace distribution range. It was at $60,253. Our low today was $60,655, so got within $400 of it. Where's it at right now, right? It's cruising up toward the 68.3 on the weekly, 64,839. First standard deviation to the top side on this weekly candle. Normal distribution, $67,739. All right. Very rare on a weekly chart that you get through these first standard deviation levels, but it can push to the second. Hell, look at some of these. Look at the dump here, right? Look at the dump here. I mean, it got way, way down outside. This is why when you understand these levels and you make a move like this on a weekly, very powerful. This is why. And I look for confluence between these weekly levels and daily levels as the week progresses. And if you get like a daily second standard deviation up by maybe a weekly first standard deviation, and they're right on top of each other, these things become like magnets for price action. Okay, that's what people need to understand. This is the biggest thing I do with all this stuff. All these charts, every one of these charts, I am continually at the beginning of the day, week, and month, I am looking for confluence between all these levels. And I'm talking our reverse wave trend, right? Our power means, things of that nature. Definitely the standard and Laplace distribution levels, or normal and Laplace distribution levels. So yeah, very powerful. Here's one thing I'm noticing on the weekly though. We need to, why do I say we need to? We get to have a big week, right? You want to see this weekly candle get up here along with these other ones, right? These return candles up by the first standard deviation, normal distribution, right? If not, what's it doing? It's printing bear div, right? That's going to tell you, hey, on a weekly chart, you know, your returns are diminishing. That's why I'm anticipating a move, right? Because as of right now, there isn't. It's building. Those are the things when people first start to learn div, they'll be like, oh man, there's bear div, I'm going short. Be careful, man. You got to wait. There has to be confluence between all the other indicators, right? As you bounce down through the time frames. Every time I start a new day, I'm bouncing from the daily all the way down to a 15-minute, then a 5-minute for entries. I'm getting an overall idea what's happening with the market. Where's the intraday trend at? Is it to the downside? Is it to the upside? Where's my capital going to be used most efficiently at, right? Am I going to counter trend scalp today, right? And these are things I know where I'm going to expose myself with the intraday trend. I'm not going to overexpose myself when I'm counter trading that trend, right? I'm not saying I'm not going to counter trade the trend of the intraday, but if I do, it's a much smaller position, right? Just like I said, I'm trying to find the best place to utilize my capital at and to reduce my risk. That's what this whole thing's about. You got to know when to put it on. You got to know when to take it off. If you don't know those things, you're going to get screwed up. You're going to lose a lot of money because of the volatility, especially if you're not trading the volatility to begin with, right? That's why we are, you know, we love teaching people how to do this. So let's go to, first let me go to the index. Let's take a peek here up on this week since we got a new weekly. Let's look at all our indicators. First thing I'm noticing right off the bat is the variance is pulling back negatively correlated. All you alpha traders knows what that means when you're negatively correlated and you're contracting, right? The variance is coming back down. Price action is going to walk up. So what are we seeing, right? We're seeing this weekly candle starting to walk up. Look at the Z-score. Z-score never faltered. Z-score, still heading to the upside. Now, what does this move? I still believe on this weekly that this is what's still playing out. Because remember, we're talking returns and price action. Hidden bull divergence. What's hidden bull? Hidden bull is a continuation divergence, right? And that's what we're seeing here. We're seeing a continuation of this move right here. How high does it go? Well, this is one thing, is what I'm seeing on the returns oscillator. Let's get rid of these. So look at what's happening right here. The returns oscillator's turned down, right? You can see, man, this thing is trying to slope up. So we got a lower high on the returns oscillator, right? We got a higher high. Here's the thing. We got a higher high on price action, right? So what's that building? That's building hidden bear div. That could be a continuation divergence to the downside. Continuation of what? This little move. But this is where people get lost with this indicator. Look at the R squared. What's the R squared telling you? The correlation between the read you're getting is decreasing. You know what that's telling me? That this freaking returns oscillator is probably going to bounce off this zero mean. And I'm telling you right now, when that kind of stuff happens on a weekly chart, I don't know what to tell you. Get your little moon hat on, right? Because this thing could just go nuts. Especially our AVZ, the historical volatility correlation's positive. Kind of going, sloping up a little bit. Yeah, it's actually a little flat. It's a little flat right now. So let's see how this plays out this week, right? If we start to get a pump, you're going to see this straighten out and start rising with that positive correlation. You can bet that. This is why you drop down through time frames, right? You want to see what the heck is going on. I like seeing the DLP like this, right? I like to see the DLP from down here, all higher lows. All higher lows just moving right along. That looks very healthy. The entropy, look at the entropy start. It's got a little tit on it. There she goes. She's starting to drop back down again on this weekly candle. Look at the weekly candle. Look at the EPP. It's telling you log returns above the mean. Correlation is increasing. God, that's a beautiful indicator. Holy mercy. Okay. So what is all this telling me? It's telling me that I like the way the weekly chart's looking. I'll tell you that right now. We got our 2400 length on our AVR contracting, negatively correlated, right? This, I'm going to have to wait until the close of the day. These will change by the day, even though it's a weekly, especially if you get volatility coming in here. They're both positively correlated, right? This is a 981 length. This is a 636 length. Might be a 525. I don't know for sure. I've been changing it up. But if you see these candles expand above this last weekly candle and they're positively correlated, we're contracting down here. We're dropping into trend again. Look out. Look out, all you wacko bears out there. Just love to short every freaking move. But like I said, if you're scalping low time frames, knock yourself out. I do. I counter trend. I counter trade the trend of the intraday, 100%. But I'm not overexposed, and I take my profit quick. I'm taking my profit at a lot of levels that I'm seeing on this chart. Standard deviations of the normal distribution, probability levels of the Laplace distribution, price action volatility ranges, right? Especially when they're overlapping. That would have been a hell of a spot. If anybody was in a long, look at all these trades. Boom, take your profit, right? If you're scalping on the 5 minute, you're going to see all these moves happening. Take your profit. Right here would have been a little tricky because it's kind of no man's land, right? So you're going to let this play. You see this create this doji. I'm out. I'm out of that trade, right? When I see that. Unless I notice something on the 5 minute volatility, 15 minute volatility reads that are telling me exclusively, hey, after this indecision, this thing's going to pull back. It could pull back to the top of the 68.3, right? But it had one more pump, came down, bounced off the middle of the weekly volatility range, then ran to the 1SD, right? But chances are, if I'm getting my entries on a 5 minute, I'm out of this trade up here real quick, because on the Wolfsbane indicator, you're going to see this getting ready to happen, right? Especially on the 5 minute, because that thing fires up. You can even drop to the 3 or the 1 minute to really nail your exits. All right, let's go back over here. Boing. So now let's, when did we get a 3-day? Ooh, 3-day. I just love the way this price action looks, to be honest. And 27th. What's the date today? Okay, yeah, we just got this baby. We just got this baby today. So we got a couple more days of the 3-day candle. Look at the returns oscillator starting to turn up, but at the same time, look, it's telling you the correlation's decreasing, right? Correlation's decreasing. Look at the variance right here. If we get a big move, you're going to see this thing probably on this 3-day before the close. You're going to see this turn up. If not, the correlation's going to turn red. Right? I'm surprised it hasn't already, considering, look at this 3-day candle. Right? I'm surprised it hasn't changed. Watch after today's close. Watch this Wolfsbane change. Wouldn't doubt it at all. Let's see. We did have a little bit of bear div on the 3-day, right? So we got that 3-day candle right from the top up here, right? Where that was the all-time high, like what, 67.1, I think? And it pulled back about 7K. That's a plenty move for a little div on log return Z-score. So let's see, what else am I noticing? I'm seeing historical volatility coming down. It is positively correlated. That was hampering that move too, to continue to the upside. Let's see what happens at today's close. There is, and you can see right here too, right? We had bear div on the DLP, right? That's log returns weighted with deviation. But look here. This is what I will always go look for in these high time frames. Look at the entropy starting to come back down, staying in trend. Got a nice bright green candle telling you the correlation's increasing. This is how you look at it all together, and that's why I'm disregarding. Like this variance is coming down, positively correlated, right? In my opinion, it just hasn't changed up yet. This coming down though, look where it started really coming down. It was going sideways right there. As soon as it started coming down, positively correlated, started price action walk down. So to close it today, I'm expecting the correlation to either shift red or this variance to turn up a little bit, positively correlated. And then you actually, because you can see on these 3-day candles, the correlation, the histogram for the returns, those can change. Those can change 100%. Let's see here. These were negatively correlated too. See the expansion right here? That's when we got the pullback. It expanded a little bit, negatively correlated. There was expansion right there, negatively correlated. Now it's flat. Flat volatility, flat correlation. That's telling you a walk up could be happening. But I'm gonna always fall back on the entropy too. The entropy and the Wolfsbane. So 3-day, there's a little bit of uncertainty. Let's see if the 2-day gives us anything. The variance is going sideways. Variance is going sideways, negatively correlated. Everybody knows that's going to walk up. Look at the z-score of log returns. It's past the zero mean now, heading up. And dun, 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 dun. What do we have here? We've got some hidden bull div for a continuation off of this move. So do we get continuation on this 2-day now? Is this returns oscillator going to, are you going to see a blue histogram pop in? Let's see, when's this close? We get a new 2-day candle today. Okay, let's see. So everybody that's listening, check out the 2-day. Check out your charts on the 2-day to close the day. Let's see what happens with the Wolfsbane. This is, I love these two reads right here. I'm telling you right now, this is why we're seeing all these bull wicks down here on the 2-day. We are expanding, positively correlated. Expansion, positively correlated. Contraction, negatively correlated. Look at the 2-day entropy coming back down in the heavy trend. Another bright green candle. Correlation's increasing. Beautiful. Now what am I going to do? Let's go to the daily. Whoops. I noticed this earlier. Positive correlated z-score of historical volatility, and it is starting to rise from the basement, right? Starting to rise from the basement. Here's a good example. When you're down this low and you get an expansion in historical volatility, the correlation is going to tell you exactly where the price is going. Look at that. Wham and wham to the downside, right? Here's another one. Expansion, negatively correlated. Wham to the downside. Here we go again. Expansion, positively correlated. Price action to the top side. Here's contracting volatility, negatively correlated. Price action's walking, right? Price action's walking up. Right here, contraction of volatility, negatively correlated. Price action walked up to the peak, right? To the 67K high. And now it went positively correlated right here, and that's where we're getting the pullback. The volatility just going sideways, positively correlated. Price action is going to walk down. Now it's shifting back up, positively correlated, starting to expand. If you see this on the daily really start to increase, it's going to line up with a lot of reads I'm getting. This thing's going to pop. Where's it going to pop to? So what do I do now? I mean, I'm going to use my common sense. And as a volatility trader, where am I going? Standard deviation of returns. Volatility, right? I want to see where the Laplace probability levels are and the normal distribution standard deviation levels are. So now I'm looking to the 1SD. It's up there about 67. But I'm telling you, if everything works out like I'm seeing on the 2-day and the daily, you could quite possibly see a 2SD normal distribution move and a 95.4 Laplace distribution move. Look how tight they are. Look to the downside. See how far apart they are? This is how I get a little bias off the distributions. These things are tight up here. What do I always say? It's a magnet for price action. This is probably mid 70s, 75K. I've been talking about 75K. I just ran that number by somebody I was having a little chat with before the weekly even closed yesterday. I was looking to that 75K level for the next all-time high, right? This is the thing about Bitcoin. This isn't going to be easy. You know how many people are going to lose money on one of the biggest bull runs we've ever seen? A lot. People lose money. You know why? Because they try to trade without understanding volatility. Hell, if you don't understand volatility, for God's sakes, just buy and hold. Go play at the beach. Go do something. Go enjoy your life. Don't sit here and try to trade if you don't understand volatility. You're going to get wrecked. You're going to get wrecked. And you know who's who's taking your money from you? People like me, right? Volatility traders, high frequency trading firms. We're the ones on the other sides of your trades. It's a fact. There's always somebody. That's what a lot of new traders don't even know how trading works. And they're out trying to trade the most volatile market ever known to man. Blows my mind. But at the same time, I'm like, retire me already, please. But no, in all fun, come on over. Alpha Trading Discord. We'll help you out. We're not knocking the way you trade at all. Everybody's going to have their own way of trading. And like I was talking to somebody on another Discord recently, and we got into a little tiff about the way he traded. He was pattern trading and doing some things. I'm not saying you can't make any money. For God's sakes, if you're over there trading this way, take your profit. When I saw him in the chat telling people to take profit, I sent him a message and I was like, kudos to you, man. All right, I got respect for anybody. I don't care how you trade. But if you're telling people, hey, take your profit, I got respect for you, man. Because that's what this game is all about. You can throw darts at a dartboard. You got a 50% chance. All right, boop. Oh, let's go short. If the trade goes against you, limit your loss. Throw another dart. Oop, let's go long. Oh, it's going with me. Oh, we just hit the 1 SD. Take your damn profit. I mean, it's an easy game. If you limit your loss, take your profit, and you're not emotionally attached to your trades. I say that all the time. That is my trading psychology course all wrapped into one. You got it free of charge. Unless you want to donate. It's pretty simple game. Pretty simple game. I don't care who you are out there in trading land, right? If I lose a trade, I'm mad at my computer, right? I'm lucky I have a little bit of reserve and I don't throw my laptop or my workstation out the window. Emotions are natural. Writing them down in a damn journal or something, this is why I took this trade. Boy, I felt great. Sun was out this morning. It looked like a great entry. I was very confident, so I let this thing turn against me. Now I'm $2,000 underwater and I'm almost liquidated. God, next time I'll learn my lesson. Dumb. All right? Stupid. That's not the way trading psychology works. The name of my trading psychology book is, there's only one page in it and it says, don't be emotionally attached to your trades. The end. That's the only psychology you need. Because if you're not emotionally attached, it will allow you to take your profit because you're not greedy. And it will allow you to limit your loss because not being emotionally attached, you can sit there and be real with yourself and be like, oh, that was a shitty entry. I'm out. All right? Do that for a month on all your trades and then tell me what your P&L is at the end. Right? I guarantee you'll be joining the damn Discord. You'd be like, oh, maybe there's something to this dude. Maybe he's speaking some sort of truth here. I just wish everybody would realize it, right? Not everybody, because we need people on the other side of our trades. Here, I'm going to whisper like Joe Biden. We need people on the other side of our trade. Oh, Jesus. I'm on a roll today. All right. So that's what I'm looking at. This is a magnet for price action up here. If we see this volatility expansion on that 2-day and the daily, look for that next all-time high to be up around 75K this week, if it happens this week, which, let's see how this daily closes. It's looking real good. There was a lot of people all bearish again. Oh, God, they're going to... It's like, oh, my God, read the charts, my friends. But like I said, a move up there, what's that going to do? You're going to have a return candle up here by the 2SD, right? There's no div. There's no div at all. That's the whole thing with these candles right here, right? Boop, 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 boop. Look at this div that was building on the weekly. We got this pullback. Bup, 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 bup. Look at these data sets, though, from this one, right? These are a little bit higher than way back here, so there's no continuation divergence to this new data set top. Now, shit can all this. Whoop, it's done with. Now we're working with this, right? Specifically, this candle. This is the high, right? These are lower high. What happened? We get a weekly pullback. Because of that, it doesn't take much on a weekly, right? Doesn't take much. We get that pullback. So we're going to look for a big week here. At least get up here a little bit above the first, right? Close the candle up here. New all-time high, 67.7 or something. Yeah. Good stuff. Let's go to 12 hour. I like it. One thing I am seeing though is a little bit of hidden bear on the returns oscillator, right? And we're getting a blue histogram. Z-score looks strong though, right? On the 12 hour. MJ loves the 12 hour. It's not that I don't. I just don't look at it too much. Just at the beginning of the days, but all right. Had bull div on Z-score. Had a little bit of bull div right here on the returns oscillator. But what did we really have? Let me see here. Yeah, a little bit of weak bull. Nothing to write home to mama about. I want to see historical volatility. I like the DLP. DLP had bull div too. And that's log returns weighted deviation. You see how all our trading, our entire system is just based on volatility, probability, and statistics. That's it. That's all it's based on. And over here, as well in the 12 hour, hey man, go lay down, dude. We're starting to drop in the trend, right? We're getting a flash, right? That flash telling you, hey, correlation's low. Can't get any lower, right? So what are we going to start seeing? We're going to start seeing increasing correlation or decreasing correlation. Right? Look when entropy drops right here. Start getting red candles. Boop, 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 boop. Right over here. Entropy starts coming back down. Red candles. Before that, it was dropping, it was green. Right? Down. Wham. Wham. Now, here we go again. 12 hour. Right back up to the upside. This is what I like seeing. This was pretty much, this whole move down was random. Right? Pink. Hey, man, get up there. I got a dog flipping out. Well, 50 hours of rain. They've been out like a total of 5 minutes just to pee and crap. So they're just ape shit. Sunny out. They're going to have a good time. So we're going to have to see how this 12 hour progresses here at the daily close. I like it, though. I like it, though. And you're seeing my workflow. I'm doing this real slow. But at the beginning of a new day, I'm like, I look at the daily as a whole. I'm looking at the whole damn chart. Once you stare at this for a while, you'll start to see an overall signature. You only need to look at it for about 15 seconds. Then I'm to the 12 hour, right? Just read that. Boom. Then I'm going down to the 4 hour. All right. Let's see what's going on here. Historical volatility is definitely low. Starting to rise a little bit, heading into positive correlation. Bull div from this point right here. That low, boop, 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 started creating bull div. Same thing on the returns oscillator, right? On the 4 hour. Lower high, or higher low, higher low, higher low right now again, right? I'm looking for this thing to probably pop out of here. Why? Well, it's building hidden bull too. It's building hidden bull. Continuation divergence on the 4 hour. It's not super strong yet, but it is there. It is building. Variance coming down, negatively correlated, right? And once again, right? We had bull div on the DLP, right? All these lows from here, 2. So let's see how this plays out. But I like what I'm seeing. I'll tell you that right now. All the top 2 AVRs. I mean, we're getting some expansion on the low length, positively correlated, but that's why you're seeing this little 4 hour shuffle, right? Look, we dipped down. Look how this reversible wave trend works when you got it set up properly, right? It'll support this price action all the way up. Bounce, bounce, bounce. We got down below. There was people in the Discord freaking out. Why were they freaking out? Because they weren't looking at the entire alpha trading system as one. I wasn't freaking out. I was going, okay, number one, this entire pullback's been random. It's not trend at all. This thing's going to pop the hell out of here, and it sure did, right? Bam! Now we're back up above the 4-hour wave trend. What else are we back up above? The power means. This was a huge step on the 4-hour, right? Huge. We're back up above. These log MAs are crossing back up the power means. The first one is, and you can see how this starts to work. Look how that log, rejecting price, rejecting price, rejecting price. Now we're working the other way. This, and if we get a big move to the upside again, you're going to see support up. It's going to come back. Check. It's either going to bounce off of these log MAs or the power means and just start walking up to the next new all-time high. Doesn't make it easy for anybody. Bitcoin's not going to make this easy. You have to know, you have to understand volatility, and you have to understand the levels that these distribution models are going to give you. These are the targets the algorithms are targeting, right? This is where price action moves to. That's what they're using. They're not programming with other things. I'm not going to like shit on any other types of trading styles, but they're not using them. Trust me, you know. Do I work there? Do I know for a fact? No, but so what is the only thing we can look at to figure out what they are programming? The volatility, the distribution ranges, and they get nailed all the. That's where the price action, that's where the pivots in price are happening. So it's pretty obvious if 90% of the trading's being done by these algos, that's what they're programming them. It's not hard. Back this baby off. So yeah, all these time frames are telling me this baby's probably going to pop now. We'll go down to a 90-minute. Not what's the 90-minute doing right now? Saw this earlier. Boop. And oh, look. These are all little plays of hidden bull, right? All these are little plays. Do they play out? Yeah, hidden bull from here to here. Boom, you get that pop. Another one. Boop, you get that pop. Now we're building another one. At some point, all these different points, though, over a longer period of a time series. And for a 90-minute, that's a long time series. They build, they build, they build, they build. Then you get a massive leg up for continuation, right? Like right now in the 90-minute, we just bounced off this bottom MA right here, this log MA. Power means they've crossed back up. Look how these power means and these log MAs just dictate price, right? Don't down. Now we're back up above. Everything's flipping back up. 90-minute is all positively correlated. Expansion on the low or on the mid length, expansion on the low length, and it is expanding. How can you tell? Well, we got our alpha volatility grade. That's implied volatility and historical volatility combined, and it is turning white, going back up to the upside. And there is a tad bit. It looks flat, but there's a little bit of expansion. That's why you always want to blow these up. Powerful indicators, powerful alpha trading indicators might be coming to a neighborhood to you through a pretty big source. We'll see how this all plays out. We got some things in the work. Let me get rid of these drawings. Boop. All right, let's see here. And we got the 45-minute chart. All over the place. Look at this returns oscillator. Bing, 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 bing. Right? But look on the 45-minute. This whole run up here on the 45, getting back above its reverse wave trend, right? High. Lower high, lower high, lower high. Boop. Finally, we get a nice move down. All right? Now, is that over? Possibly. Because now is what we've got is not really. Not really. Nope. No hidden or bull at all on the 45. It was on the 90. Volatility is pretty damn low on the 45 for sure. Entropy is still random. We are flashing. We're gonna have to see how this plays out. You can see the div on the 45 with the deviation weighted log returns, 100%. Historical volatility is starting to expand. It is sloping to the downside, so we're going to want to see that come up. And yeah, I mean, right now, this is the returns oscillator is turning down with some hidden bear. So we'll have to see what this plays out, but there is no correlation right now. So we're going to want to see on this next 45-minute candle, which closes in about a half hour, to see how it's correlated, how this read between the returns and price action, how it's correlated. We're going to want to see that. And let me go to the stream chat for crying out loud. Holy crap. Hey, Sayron. The volatility is telling you exactly what's going to happen with anything that's going on in the market. So I guess you would say it's predicting it. Let's see. Where am I? 15 minute? No, see, 15 minutes expanding positively correlated. That's how maybe when you wrote that. Let me see. Is that 15? Or are you talking about that one move I was showing with the PB1 or PB2? Yeah, Yasha's answering. Someone like in that candle, all expanding negative. If you're having expansion negatively correlated, price is going to come down. Yeah, that's why it's like you gotta. It takes a while, man, to get your limit orders filled. It just takes a while. It takes a while using everything together, like Yasha's showing right here, right? You've got to look at what's going on with the divergence between returns on price action on low time frames, and also where it's at on the VRE, right? Like boom, coming down here, and you see something setting up. So where's it likely going to go to? Right down here to the center of the weekly volatility range, and say it goes and it was going to drop down here. Well, you know, maybe maybe you're given that much leeway. This would be a good spot right here to get an entry right there. Why? Because if it drops below the 68.3 on the daily, boom, you're out of the trade. No biggie, right? You fight to live another day. You barely lost any money. That's how you limit your loss. But it was it was a higher probability you were going to bounce here, and that would have been a good entry. And you front run these areas a little bit yourself. Don't get front run them. That's how I do it. Yep, there you go. That's exactly right, Yasha. If I'm greedy on my entries, I usually don't get them. You got to give up a little to get a good one. Sometimes you nail it. Sometimes you got to front run them a little bit. Don't let them get you. All right, remember, you're down here swimming in the shark tank with the big mechanical great whites. You're a great white shark, but you're down here with the big boys, right? They're down here. They make you earn it. They're going to make you earn your entry. It's increasing or decreasing. That's what the histograms are telling you. So if you're getting blue ones and they're getting bigger and bigger and bigger, it's telling you this move is strong as hell. Very strong. Same thing with the pink ones. But yep, exactly. Exactly. Where are we? 62.8 right now. But this is typical from what's going on right here, right? We need a new day. This is what I wanted. This was the most important thing for me. Get up in the weekly volatility range, man. We got the new weekly. Whatever you do, don't freaking reject off the downside and then break the bottom side of the daily volatility range. What is this all telling me? This is showing me strength to be able to get up into here, right? But look what was right above the weekly. Was the 1 SD on the daily, normal distribution. So we rejected from there. Now we're back inside the top in the middle of the weekly volatility range. And it's good because we got the 68.3 on the daily to the top side right below the middle. If this thing happens to drop down below, probably get a bounce here. Or probably going to get a bounce off the center of the, put it this way, balls into bull's court, right? Let's see how these algos are going to work this, right? But to me, looks good. Looks real good. And it is 3:02. So that's going to wrap it up for today. You know, I kind of gave a nice little analysis on Bitcoin. We'll shuffle through some of the other cryptos in the week to come here on every stream. If you want, definitely anybody that's in the Discord, in the stream chat right here, because usually once we're done with the stream, the chat goes dead until the next stream, right? Leave in there what you want to look at, and I'll pull it up, right? Well, I will pull up that asset and take a peek at it. But there is one, boy, I noticed. And let's see here real quick. What's going on with Solana, man? It was taking off. Yeah, I mean, it's at 210. It's at 210. Looking good. But of course, you know, when Bitcoin's doing this, these little pullbacks, you're going to see these altcoins go crazy. For sure. For sure. So yeah, you guys, everybody out there watching this maybe for the first time on YouTube, link to our Discord's in the description. Come and check out Alpha Trading. You just read the welcome message when you come in. It explains everything. I want to thank everybody for watching live in the Discord. Right, it's always a treat to see you guys in here. A lot of the regulars. Other than that, though, wherever you live at on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon. I'll see you guys in the chat later and stream tomorrow, 2 p.m. Pacific Standard Time. Everybody be cool. See ya.